Peter Mcguire, CEO of XM.com, joins us. He's usually in Australia, but I guess he's enjoying the warm weather down in Dubai. Good morning, Peter. What takes you to Dubai?
Well, good morning, Ashu. Well, actually, I was in Doha yesterday. I'm in Abu Dhabi today. I'm heading up to the meeting in Vienna on over the weekend. I think it'll be quite exciting on Wednesday the 30th. And whilst many traders, actually, and we've discussed this for the last 3 or 4 months, what's going on by the end of the year, I think many are still sitting on their hands going, will we actually see some breakthrough as far as cuts in production?
Well, Peter, first I wanted to thank you for taking the time out during your travel schedule. But two things that I wanted to check with you. One, the U.S. markets seem to be defying gravity largely. But Peter, that should not be very difficult to understand because there is so much easy liquidity. And whether it's the Chinese or whoever else, the outflows seem to be going into the U.S., some kind of a safe haven flow. How long do you see that continuing, Peter? And could it be possible that most analysts and fund managers are wrong that this rally should stop, and maybe it doesn't? Maybe Dow goes to 25. That there's just so much money chasing this that there seems to be no stop to it.
Well, exactly right. I mean, you only got to put your mind back probably 4 or 5 months what the US dollar index has performed like. 93, 94 now. We're at the 100 plus. Down through 19,000 this morning in New York. I've been watching it for the last few hours. I mean, it's absolutely, as you said, defying gravity. There is no doubt that when you look at what the Trump presidency, and now we're 2 weeks, since the election, that seems to be gaining momentum. The infrastructure spends, the plans, and of course, US dollar rates probably rising next month. So in turn, it's gaining momentum, and yeah, you might be right. You might see a 23, 24,000. I mean, put your mind back to where Obama, when he came in 8 years ago, and where the Dow was. The S&P was about 670 in the crash of November 09, and look at it now. So we might see 25,000 soon, Ashu.
So is it possible, sorry, Peter, that the commodities rally is also being driven by the same money because, neither is China consuming. And India, of course, we have a kind of a temporary slowdown. And American talk about trying to build infrastructure is just talk. And we know you can't build highways overnight. I mean, it requires tendering, what have you. Is it possible that everything from iron ore, coking coal is essentially just running into a trading bubble?
Well, remembering that they all received massive hits, as far as washouts on pricing, iron ore was smashed, copper was smashed, all of it down, nickel, and of course the crude market. So, yes, they're certainly rallying well now, well off their all-time highs, but these markets just prove to us, and I think that, with population base exploding over the next, 15, 20 years, that's globally, I can't see there really being a slowdown as far as consumption patterns. The world is very much embraced as far as construction. Have a look at the cranes in the Middle East. Have a look at what's happening in your wonderful country and, of course, across Asia. And then now America's going to stoke the fire. We've got a lot of building. We've got a lot of people to house, and we've got a lot of, washing machines to buy. So I think the consumption's only going to increase, and it's going to be an exciting time for that whole sector. I don't necessarily think you're hitting bubble territory, Ashu, but these markets go in valleys and peaks, and it's certainly a little bit upward at the moment.
Peter, I was asking this question in context to what Trump has said. In fact, as you know, there have been severe restrictions, environmental restrictions in the U.S. on coal mining and also on shale. And Trump has clearly said he's going to remove those restrictions. So if anything, and U.S. coal is very high calorific value, anthracite kind of coal. If that and shale gas come back, I'm just wondering, that combined with the fact that whether it was the US or China, the per capita they've reached starts to peak out commodity consumption, actually doesn't increase it. I'm talking about metals. How do you look at that, given the fact that these scenarios are playing out at the moment?
Well, I think what you'll see is, a sell-off again. And as I get older, I said this to someone yesterday, things seem to happen slower, not quicker. And everyone wants things to happen quickly, and I'm sure that President-elect Trump will be very impatient. He seems to be an impatient person by nature. In other words, he's an entrepreneur. He wants things to happen and happen quickly. So in turn, he'll make those big decisions, and he's got a lot on his plate. What happens on the big picture side, you might see markets stall, but if he's got an agenda and he needs to really engage that nation and bring it back to where he thinks it needs to be, then that's going to be encouraging. The shale side of it, and of course coal, but more importantly, what happens with nat gas, what happens as far as US being an exporter as far as crude, all of this is going to play into it, and I think that the OPEC's in for a bit of a rough ride over the next decade or two with the US coming back, so it's going to add quite a lot of excitement to these markets, Ashu.
Peter, as far as emerging markets are concerned, we've seen some flow out of emerging market bond funds. Is it possible it is temporary, that there is so much money coming out of central banks that it's enough to finance both the boom in US bonds and stocks and to finance emerging markets? At the end of the day, emerging markets don't need too much money to be in huge secular bull rallies, maybe 100 million, 150 million, which is peanuts as far as America is concerned. There's enough to make these markets boom into 30-40% territory.
Well, that's right. I mean, if you've got a strong Dow, and there is no doubt that you read into him, and I've observed him for the best part of 30 plus years. I remember standing outside. I was trading on the NYMEX, and I was at the front of the Trump Tower in '86, '87. I was amazed, just the magnitude of what this guy is, and he's a visionary. And I put it on that, if he's going to take this market higher, if the market embraces him, and I think they will, he'll wrap the right people around this, that if you can get the Dow up 20, 30% over the coming, matter of 3 to 4 years, if not higher, that's going to lift everyone. That's going to lift Asia. That's going to lift all through Europe. It's going to add value, and that's his agenda. He just wants to build, and he wants to make things better, and he wants to bring back America. And how he does that is just embracing and engaging, and it's going to be an exciting time. I truly believe that, the next, under his tutelage, I think we'll have a very positive time for the markets over the coming years, and that'll be great for India. It'll be wonderful for, I think, a lot of emerging markets through Asia, and it's only going to add value.
So, Peter, actually, just to take a contrarian approach, essentially what we are starting to see again is the boom that started around 2004 to 2007, where the money was enough to drive up all markets, geographically all markets, commodities, equities, bonds, and push up all currencies to levels we had never seen. So is it possible that in the next 12 to 24 months, the world's actually wrong about indices being too high, and that we could see levels 30 to 40% higher on currencies, on commodities, and on equities?
Well, you could do. Remembering that when you put your mind back to that period, we saw a massive sell-off as far as US dollar versus a lot of those currencies. You saw gold rally very strongly, saw crude go, ridiculous. It put on, 40, 60% in that period of time. You had a resurgence or a very strong grain market, soybeans, wheat, all of those, and corn, of course, agricultural feed. We had the changing of the guard as far as, Chinese consumption was really lifting, and then that pushed up crude, and everything really, rallied strongly. This time round, the world is dropping interest rates with a lot of the mature markets. Have a look at Europe, look at Japan, of course, and now you've got the States wanting to move forward and raise rates, and the US dollar's had that resurgence. So I think it's a little bit different this time, and I think the US will lead it. The world needs growth, and I think you're probably going to be right. You will see those big growth targets and growth numbers achievable, and it's going to be an exciting, 4 to 5 years. If he gets another run at it, and he takes another 4 years, Ashu, then it'll be very exciting where we see this Dow end up in 8 years' time under Trump.